In today's video, we're going to discuss if it's time to abandon Yieldmax funds for Roundhill funds. Yieldmax, Roundhill, Cornerstone, and Defiance help us earn over $400,000 per year in dividends, as you can see below. And our performance value shows that we're beating all the indexes with Yieldmax, Cornerstone, Roundhill, and Defiance funds. We're up 18% for the year now. The S&P is up 12, the Nasdaq's up 11, the Dow's up 4, and the Russell's up 2. Also on a daily basis, we're up 8,000 on Friday, or 0.69%. As you can see above, that beat the indexes as well. So we're beating all the indexes using Yieldmax, Cornerstone, Defiance, Roundhill funds, and some margin, which all help us live financially free from our 9 to 5. If you need help doing the same, email me for my e-guides at aikentod48@gmail.com. For every $1 you put in your account, you get $4 of purchasing power. I'm just using a fraction of this 1 million in purchasing power to get ahead. I have to give this introduction in every video because a lot of people don't know what I do here at this channel. We get these dividends of over $400,000 per year, which then pay back my margin debt in less than 1 year. I'm then left with all these dividend assets to myself, paying monthly cash flow for life that qualify to banks for loans. As you can see there, we have a lot of staples plays, by the way, and that's how we've been outperforming the market as well. We've been in defensive names. Defiance falls less on down days. Roundhill is really exciting. So we're going to get into Roundhill today, and we're going to discuss if we should abandon everything for Roundhill, okay? Roundhill is quickly becoming a crowd favorite, as you all know, and it's deserving of the praise since it has a huge dividend and it's done well since its inception growth-wise on the chart, as you can see here. Okay, here's a chart of QDTE. You can see that it moves upward, left to right on its chart, and it has around a 60% dividend. So this seems like it has best of both worlds, dividends and capital gains. So what's not to like about Roundhill funds? Why don't we abandon everything for Roundhill funds? Well, there's a reason why I can't abandon everything for Roundhill. I have to keep some Cornerstone, Yieldmax, and Defiance, and it's not just because of the higher maintenance for Roundhill. Okay, QDTE has high maintenance, all right? 50% maintenance, as you can see here. This is why I wasn't in this fund to begin with. Both of the Roundhill funds, okay, QDTE and XDTE, I wasn't in these funds to begin with because, again, they have 50% maintenance. If you need help understanding maintenance, that's in my Volume 3 e-guide. You want to keep high available withdrawal when you're investing on margin for these dividends, okay? So I can withstand over a 20% correction in the market and still withdraw freely from my E-Trade account. I swipe my E-Trade card to go wherever I want in this world. I can buy cars, clothes, shoes, whatever I want with my E-Trade card, and I spend out of my debt. So my debt will just go up each month, but then my dividends pay that back each month. The key, once again, is keeping high available withdrawal so that you can withstand over 20% corrections in the market and still withdraw freely from your brokerage account so that you can pay your bills and avoid having to work a 9 to 5. So you need low maintenance in order to do that, and QDTE is sort of high maintenance, okay? Now you can go to other brokers who have lower maintenance like Robinhood or Interactive Brokers, but they might not have the special drip for Cornerstone. Cornerstone is a 5-star fund. If you don't know about Cornerstone, here it is here on Morningstar, and it moves upward, left to right on its chart. So I have to have some Yieldmax, I have to have some Cornerstone because they offset Roundhill in certain ways, okay? Cornerstone moves upward, left to right on its chart, and Roundhill also moves upward, left to right on its chart, but Cornerstone has 30% maintenance, okay? So this is why I have to have so much in Cornerstone. I have about 400 grand in Cornerstone, and you just have to time Cornerstone between its rights offerings in order to offset its NAV erosion, okay? Here's CRF on a chart really quickly. All right, I don't have much time to go into Cornerstone today, but this is a total approach when we're living the FIRE lifestyle, okay? We not only want dividends, but we want capital gains. That's how we're outperforming the market on up and down days, is because we're getting these dividends without the erosion, okay? Once again, we get 400,000 in dividends, over 450,000 in dividends now, but we're up 8,000 on Friday, or 0.69%. So we're getting best of both worlds. We're not being affected by the erosion from Yieldmax or Defiance, and again, that's thanks to Cornerstone. Just remember to time Cornerstone between its rights offerings, and that's in my Volume 4 e-guide if you need help playing Cornerstone. When you buy my e-guides, you get free access to this Discord chat room for life where we alert you of the Cornerstone rights offering announcement. We have over 1,000 members here in the Discord chat room pursuing the FIRE lifestyle. So if you ever have questions about anything, they can help you, okay? You always have my phone number when you buy my e-guides because my phone number is free with my e-guides. But you also have Discord access, so you can ask any of those members there if you have questions about your specific brokerage account. And most importantly, we give you the Cornerstone rights offering announcement there on Discord, okay, here on the announcements channel. So Cornerstone, we can't abandon Cornerstone because it has 30% maintenance and it moves upward, left to right on its chart between its rights offerings. Just again, time it between its rights offerings. Factor back in dividends and drips too for its chart. If you own Cornerstone up here at 8, it's dripping the dividend down here at 7 for free money every month. That's a very special feature that comes with Cornerstone. That's why we can't abandon Cornerstone. So we finally got our NASDAQ dip, okay, down 15% from the highs. And we've been pounding the table on the NASDAQ because it was on the 200-day moving average. And so once we saw this tag of the 200-day moving average, we immediately moved into Roundhill, Defiance, and Yieldmax funds. But I have different allocations in all of these funds because they all serve different purposes. I just explain the merits of Cornerstone. Cornerstone also has tax-free dividends, and there are many other benefits I could list for Cornerstone. And Yieldmax has many benefits, okay? Yieldmax, yes, obviously it has 50% maintenance as well, okay? YMAG, Y-M-A-G, has 50% maintenance with a 38% dividend, so it gives you a nice dividend to offset that higher maintenance. However, Yieldmax can fall hard in a market crash, and it's not fully diversified like Roundhill or Cornerstone. So I don't really like YMAX as much because it decays on its chart, as you saw in my prior video, but I do like YMAG because it moves upward, left to right on its chart here. So you have to have YMAG because it gives you a really nice dividend and it moves upward, left to right, even more so than Roundhill funds, okay? You could make a case that this could move up more than Roundhill funds, YMAG could, if the Magnificent Seven stocks had another big rally. So I have to keep YMAG just in case we have another rally with tech because it can move up the most, as you can see on its chart here. Even in some cases more than Cornerstone. But I would doubt overall that YMAG can beat Cornerstone on its premiums because Cornerstone averages 20% premiums per year. I've had 50% premiums in Cornerstone, plus the 20% dividend in Cornerstone, plus the special drip in Cornerstone. So that's why I think Cornerstone is still the best fund to have in your portfolio. 30% maintenance, moves upward, left to right with upwards of 50% premiums in a year, plus the 20% dividend and the special drip and the total diversification. So that's why I have 400 grand in Cornerstone. I have about 300 grand in Defiance. And the reason why I have so much money in Defiance is because Defiance falls less than Roundhill on down days. Okay, I've documented this in past videos. Defiance falls less than the market on down days and even Roundhill on down days. However, Roundhill moves up more than Defiance on up days. Okay, so the charts for QDTE and Defiance are night and day. QDTE looks very good on a chart and QQQY looks pretty bearish on a chart, but you have to factor back in dividends for QQQY. If you go to Morningstar and you look at the performance of QQQY or IWMY, you'll see that they're outperforming their indexes, okay? You just have to factor back in dividends and drips for Defiance funds. There it is on the chart there for Morningstar. You see IWMY blows away its index. So I like Defiance funds because they are outperforming their indexes, but Roundhill is doing a little bit better performance-wise in up markets. But in down markets, Defiance can fall less than Roundhill and the indexes, so I keep more money in Defiance. Plus, Defiance has 30% maintenance still, okay? It's the last bastion of zero DTE funds that has 30% maintenance. All right, so QQY, here it is, 30%. This is why I had so much in QQY once again during the recent market meltdown, because it has 30% maintenance, so it preserved so much of my equity. This is how even after a 15% correction, we're still able to withstand another 20% correction in the market. Then my dividends will come in pretty soon this month. We already got our Roundhill dividends because they are weekly payers. So that was another $1,500 this week alone, and we're going to keep getting these dividends of about $40,000 per month, which will not only pay down my margin debt quickly, but it's going to add equity back into our account quickly. Okay, every time you pay down your debt, your account value grows by the equivalent amount and your equity grows by the equivalent amount, so I can keep withdrawing from my E-Trade brokerage account whenever I want to, thanks to these higher than average dividends. QQQY also acts like bond play for me. Okay, I like to park my money in QQQY at the highs with the lower maintenance, and it falls less than the indexes and Roundhill on certain down days. And then I like to buy Roundhill at the lows after the correction is over. So I have 100K worth of Roundhill funds now, and I'm looking to add a little bit more to Roundhill funds on any dips from here because I already showed you a chart of the NASDAQ and it was looking very constructive on the 200-day moving average. So I want to buy more tech on any dip after that sizable correction, but I have to watch my maintenance and I have to do it one day at a time. We don't know if we're out of the woods yet with this recent correction, but I'm never worried about that because I keep my available withdrawal high and I hedge my portfolio with put options, okay? The put options that we had on during the recent crash were up over 1,000%, which helped offset a lot of the volatility in our account and kept our available withdrawal high. So you have to keep on your options if you're using a lot of margin or if you're using a lot of tech like I'm doing to get my outperformance and my dividends. If you need help insuring your portfolio with put options like I do, that's in my Volume 5 e-guide. When Yieldmax sells calls, obviously they benefit from a rising market, and so if we get another uptrend here with tech, you should see our income rise further with Yieldmax funds because they raise their dividends in an up market. So you have to keep a blend of Defiance, Yieldmax, and even Cornerstone because Cornerstone keeps its dividends the same throughout the year. To reset your 21% yield with Cornerstone, you have to play that rights offering properly once again. Okay, so if you need more help doing what I'm doing, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement, and you get my phone number to call me at whenever you have questions. So if you want me to help you negotiate your margin rates down or walk you through maintenance in my account, we can do that. Just give me a call. Okay, and if you like the video, click like or subscribe. I really appreciate it when y'all do because it's really helping push these videos out to more people. So please keep those likes coming, and I'll talk to you soon, everyone. Thanks.